Hi, I'm Ken Amundsen with BizWest, and I'm at the Northern Colorado Real Estate Summit. I'm here with Nicholas Sly, who is the Denver executive with the Federal Reserve. And he participated in one of our panels a few minutes ago. And
Enjoyed the conversation thoroughly, so I was glad to have a dialogue.
Very good, very good. I wanted to ask you a little bit about the banking sector with regard to what's been happening in recent weeks in the banking sector. And what are you seeing in this region as a result of some of the things that have been happening on both coasts and elsewhere in the country?
We're seeing a couple of things. One is inside the banking sector is certainly a push to understand what's happening, what it meant for banks' balance sheets and the deposits that they were holding, and how secure they would be, and their ability to continue to provide lending. But it's quickly shifted to a conversation about, okay, what are the implications for banks' willingness to lend. And as we ask them over the last few months, banks have been pointing out that they're tightening credit standards. They've been making sure to look at deals that need them to be a bit more secure, or making sure they're really premium deals before they extend that credit. And then over the last few weeks, just seeing that trend continue is really focusing on premium deals for lending that goes out the door.
Are you seeing that lenders are asking for more cash from the borrower?
It's a combination of not just some indications that they want to have more cash into the deal, maybe some issues about where the money is going to be deposited, maybe a little bit more clarity about the deal going forward in terms of securities and collaterals that you might have for to get actually a line of credit extended. I will say that the experience for Northern Colorado or here in other parts of the Front Range is a little bit different than you might see for community and regional banks in other parts of the country because of the startup community here that is so
Okay.
focused. So you do see that community in particular really thinking harder about where their banking is going to go. They're looking for banks that might provide some of the financial services, those specialized financial services that might not be absent from the market.
Okay. Okay. Are you seeing any shift in deposits from regional banks to national banks, for example?
This is something I think certainly that our bank regulators are monitoring closely and that we see here as part of the chatter. Yes, we have seen some shift in deposits, but I think more importantly, what we've heard is from businesses who hold large accounts being thoughtful about how they might want to move their deposits, or even how they can do that. So it's something that is a bit more top of mind and a focus of the conversation. For me, when I think about the implications of those deposits moving, it's one for safety and soundness of the bank system, but I think also for what does that mean for banks' ability to extend credit or
Sure.
actually make those loans. That's where you start to see changes in real business activity. And so far, while that management conversation is really top of mind for most businesses, it doesn't seem to be deterring the capital expenditure plans or the hiring plans too significantly yet.
Okay. Okay. And then to continue on some of the conversation that you were having just recently at one of the sessions, with regard to leases and loans on office properties.
Yeah.
What are you seeing there? Are there some owners of properties who are going to be in difficult situations in the coming months?
This is something that we want to try. One of I think the most important functions that we can perform is to get out and ask this question before you have to wait to see it
Okay.
in something else. And so we're asking a lot of property owners or lenders how they're seeing those vacancies pick up. And we're actually seeing, if you look at office in particular, we are seeing vacancies pick up in a particular number of properties. But what I think is interesting is that the vacancies are picking up and those occupants are moving to sometimes just a few miles down the road in some metro areas. And so there's a real rationalization, we might say. There's a real choice being made. It's not a decline in all metro areas, or say here in the Front Range, whereas it's a move from a lot of Class A property
Okay.
to Class A somewhere else. What would typically have been a very good office property, sometimes with or office tenant, you might somewhat be rethinking that a little bit. So I do see some changes in how we characterize and how those in the industry are characterized what is deemed a really good office property or a really good office tenant.
Okay. Yeah, there does seem to be a great deal of competition on lease rates among office properties,
Yeah.
and they're not necessarily going up. They're holding steady or going down in some cases.
Yeah, and some of the subleasing rates we're hearing are starting to decline. But at the same time, those markets have gotten a little bit thinner, and so finding the price, finding where those prices are going is actually a little bit more difficult when you don't see as many moves or as many deals being made.
Okay. Well, thank you very much, Nicholas. I really appreciate you spending a few minutes with us here and elaborating on some of these topics.
Thank you kindly. Enjoyed the chance to connect.